Welcome back. You're still tuned into Trading Hour. Well, we've been talking about action in the secondary market, but there's no dearth of action in the primary market. ACME Solar's IPO has opened today, ends on November 8th. The size of the issue is 2,900 crore rupees, which is around 2,395 crore of fresh issue, and the rest is an offer for sale. The company aims to use the proceeds of IPO for debt repayment and general corporate purposes. To discuss this and more, Manoj Upadhyay, the founder and chairman, and Nikhil Dhingra, the CEO at ACME Solar, is joining us now to take a few questions. Gentlemen, good morning. Thank you so much for joining in. And you know, one of the important reasons for this fundraise is debt reduction. Can you give us a sense of what the total debt is currently? How much will you be able to reduce after this fundraise? And what would that mean in terms of interest cost savings every year? What is it currently? How much does it go down by? Let me take this question to Mr. Upadhyay.
So I'll request, this is the financial question. Nikhil will be able to reply it much better.
Yeah. Just on the debt first, see, we are in the business of setting up renewable power plants which sell power on long-term power purchase contracts to the government. Typically, the power purchase agreement is for 25 years. So we get a debt of around 20 years, which is basically matching the tenure of the PPA because you get an annuity stream of revenues. So we have a total debt of around 9,500 crores, 9,300 crores odd. We are repaying around 1,800 crores from this primary issue, and 600 crore is broadly from for the general corporate purposes and working capital. This 1,800 crore will take it down to around 7,400 odd crores debt. And of course, this will each project, like I said, has a 75-25 debt equity ratio. And of course, this debt reduction will reduce the interest cost typically by around 8-9% is the interest cost. So you can estimate the interest cost reduction. The key thing why we are doing this debt repayment is it will give us funds for Capex. And because the cash flows will be available for us to do Capex, we have a capacity of around 3.7 gigawatt peak today. We want to take it up to around 6 gigawatts, given whatever the projects we have already won and project PPA we have signed. So this will help us fund the Capex for those plants also.
So to increase your Capex to 6 gigawatts, Mr. Dhingra, what is the Capex that you have outlined? Could you give us a number, and how will that be spread?
To reach there is around 37,000 crores. And how the Capex happens is 75-25 debt equity. And all these projects are typically done in a special purpose vehicle below the issuer company. And we do the EPC and O&M for these projects in-house. That's the key differentiator for us. And the 75% of debt, out of that debt, around 12,000 crores is already sanctioned from the financial institutions. Our key lenders are PFC, REC, IREDA, SBI. And we have been working with these institutions for around 12-13 years. So in terms of the equity contribution for those, as we said, the cash flows, the operating cash flows of that 3.7 gigawatt, then the EPC accruals and the primary fundraise, all of this will help us in meeting the equity portion of that.
So the equity portion will be 25% of 36,000, right? So that's about 9,000 crore rupees is what you need to put in.
Yes.
And this is over a period of what? And what is your current operational capacity right now? We have the number as of 31st March.
Yes. So as of 31st March, it was 1,800 megawatt peak. And as we speak in October, we have energized a 1,800 megawatt peak plant, which has really come up in the operationalized in the last month. So that is why I was saying that our capacity today is 3.7 gigawatt peak. So that is the current operational capacity we have, right? And of course, the FY24 had the numbers for only 1,800 megawatt peak. FY25 will have the numbers for whatever we have constructed. As we move forward, we have already funded 450 megawatt of capacity already, which is targeted to get operationalized by March of 25. And then these projects are coming up in phases. Typically, what happens is there is a reverse auction. As you know, in renewables, the whole of government capacity, the central government capacity is coming up through auctions. You win an auction, then you sign a PPA in the 4-month period, which the government has mandated. And after PPA, you need to build the plant in 2 years. So typically, 30% of the Capex happens in the first year. And the 70% Capex happens in the second year. So that is how we will be doing the Capex.
So is the entire capacity tied up via PPAs, or some of it is sold in the open market as well?
So entire capacity is won through reverse auctions, whatever we are building. Our business has been to tie up capacity in long-term PPAs. We are doing a small merchant plant of around 300 megawatt AC and 450 megawatt DC. But that capacity also we want to tie up in the PPA in the midterm, because we don't want to take the merchant risk for 25 years. We are okay to take merchant risk for 1 year or so and then tie it up in the PPA.
So typically your contracts are how long? How long are these agreements? And is that the reason? And how does that impact cash flows for you? I wanted to understand, because if it is a shorter one, there could be volatility.
Exactly. So the key thing here and why the renewable has grown, it has grown in the past 10, 15 years is because we are giving a flat tariff to the utility for over 25 years. And in these 25 years, of course, inflation changes, the Capex changes. The good thing again about renewables is the whole Capex is upfront. So there is no, and the operating cost is minimal. It is principally maintaining the plant, like cleaning and various other preventive maintenance activities. So the EBITDA level is around 92% at the plant level, and at the holding company, typically around 85, 87%. So in terms of the long term, and they are all 25 years, all our contracts are 25 years, and they are not short term. And government is doing all of these contracts through 25 years. All the state utilities and the government utilities are doing 25 years. How it helps is because you get long-term debt, right? And your cash flows are very predictable. The other thing is how much percentage of a utilities portfolio is solar also determines the stability of cash flows, because other than the tariff, the key thing is the generation. How much generation your plants are doing is another determinant, because revenue is a multiplication of how much generation you did and what is the tariff you're selling it at. So our portfolio is 100% solar, which gives us an advantage in terms of the predictability of revenue. And of course, the other cash flow stream which is there is the construction revenue coming from the construction of these assets, because we are an integrated utility which is into constructing, developing, and operating the plants also.
Just one more question, getting back to your capacity. Current 3.7 gigawatts is peak. Goal is to hit it to 6 gigawatts. Can you give us the path to achieving 6 gigawatts by FY25, and what would it be FY26 and so on?
Yeah, so so we have given the estimated dates in our RHP, DRHP also, because we can give that because of the PPA timelines, right? So as per that, we are doing 450 megawatts more by March 25. And then by October 26, the rest of the capacity will be coming up, which is 2.3 gigawatt more. And these are mix of peak power projects, which are firm and dispatchable renewable energy, hybrid power plants, and they have a mandate of doing it in 2 years. So out of that 2.3 gigawatt, around 1300 odd is PPA signed. I'm talking in the AC capacity numbers. Of course, we have won certain more projects also, which after the date of DRHP, which is around 900, which we have updated in the RHP also. So overall, we have 3200 odd megawatts of capacity, and all of this will be done by December of 26.
Okay, all right. Mr. Upadhyay, please come in on this. I just wanted to understand what the Capex plans would look like going forward. And in terms of rates as well, I wanted to understand what is the average cost of sale of electricity across portfolio? Any competitive intensity that you're seeing?
No, I think it is very important to know first that the government itself has increased from 10 to 12 gigawatt every year, the auctioning to 50 gigawatt. That has given enough opportunity for all the developer. That's the first thing, that there's a big market and we are all participating in that. And there is enough for everyone to do that, because finally when we win the project, we have to also execute the project in 2 years of time. And for that, you need to have a connectivity in the right radiation zone. So it is very important what you are bidding. You should have these preparation well in advance so you can finish the project in time. As Nikhil mentioned that what we are building is 2,300 plus 900, almost like 3,200 megawatt. So these megawatt actually is not 3,200 megawatt. I want to clarify it, because they are what is called FDRE, firm dispatchable renewable energy. When you call it firm dispatchable renewable energy, means you have to provide the power in the evening, in the morning, and as well as in the sun, in the daytime, as well as in the night time. What it means is that you have to have a 2 or 3 times capacity of the solar, battery, wind. So technically, these FDREs are replacement of the thermal power. So we are doing that. So the Capex per megawatt significantly goes up from the solar. technically, what we will be building this 3,200 megawatt will require almost like 40 to 42,000 crores of capex. First, our target is to finish this 2,300 megawatt. That was the first thing that we filed before DRHP. I think once we finish that, then we will focus the next 900 megawatt.
Okay. All right. Thank you so much, gentlemen, for joining in today and giving us all those details and explaining the business to us. And we'll be speaking to you very soon again once you get listed as well. We'll do one thing. We'll slip into a short break now. The 11,300 crore rupees Swiggy IPO also opens for subscription today. We'll get to more details on the issue coming up on the other side.